I have sold all of my Bitcoin. And no, this is not an exaggeration. I'm being serious. I literally have sold all my Bitcoin, and I want to explain why in this short video. So basically, I was thinking the other day, because I always try to think through my investment. You know, I don't want to have any bias. I don't want to have any wrong perspective on why I hold any of the assets that I do. And so I thought the other day, as I was going for a walk, why do I own Bitcoin? Like, what is my bull case? What's my bull thesis for why it's going to go up in price and make me all this money? And I thought over it for a few days, and I literally could not come up with a reason why Bitcoin was going to make me money. And so I thought, okay, let me ask everyone else that I know what they think. And so I put on Twitter, I put it on Telegram, Facebook. I asked everyone I knew, guys, what is the bull case for Bitcoin? Like, why are we investing in this shit? And I got a bunch of answers, and none of them were convincing. I'm going to be honest. There was some all right answers, but there was nothing convincing like I saw back in 2019, 2020, when I was first, getting a really serious position in Bitcoin. And here's some of the basically answers that I got given. The first one was that ETH is centralized and central bank digital currencies are coming. Financial sovereignty is the case. See, the problem with this answer is that central bank digital currencies are not a positive for Bitcoin. They're a negative for the entire market. If central bank digital currencies become a thing, that's going to obliterate the use case of stablecoins, lending and borrowing, and gambling, and all these use cases that most people use crypto for. And all that wealth is going to evaporate. All the interest of people in that sector is going to evaporate. And that doesn't just be a positive for Bitcoin, that's a negative for the entire market, because that basically removes an entire use case of crypto participants, right? And so when an entire sector of crypto dies, that is not positive really for anything. That's a negative, because it takes away from the entire industry, right? It's like when you lose an arm, obviously this arm is better off because it's by itself now, but you just lost a limb. The whole ecosystem depends on all the different parts for it all to grow. Everyone's in this together. So yeah, sure, maybe something dying maybe can be argued as a positive for Bitcoin, but in my opinion, it's a negative. If central bank digital currencies do what everyone expects them to do in a negative way, that's not good for anything. And so the second argument I got given was a fixed total supply with rising network popularity and another supply halving coming up. Okay. The problem with the fixed total supply argument is that is actually a bad thing, not a good thing for Bitcoin. Because think about it, right? In order for Bitcoin to be secure, you need to incentivize the people who bring security with money. Who secures Bitcoin? Well, it's miners. How do miners get incentivized? Well, they get inflation of new tokens, that's number one, and they get money from fees spent on Bitcoin. So there's two ways. Now, the problem with Bitcoin is if they removed all the inflation of new coins, there would not be a sufficient fee market to bring sufficient security to Bitcoin, and its price would collapse. So right now, take away inflation, Bitcoin is dead. And so when you have a fixed total supply, this basically means that every 4 years, miners are getting half the amount they were before. And this has been fine for the past, couple halving cycles, because every single halving cycle, Bitcoin's price is significantly higher. So yeah, maybe the miners own half as much Bitcoin, but the Bitcoin that they do own is worth 4 times more. So it's fine. But you can't expect that trend to continue to happen, because Bitcoin can't just grow 2x every 4 years into perpetuity. It can't just infinitely grow. So we're going to get to a point where Bitcoin is not growing its price to justify or be able to handle the 50% drop in the inflation rate. And so, yeah, sure, fixed total supply sounds great, right? Oh my God, there's no more of this fiat central bank money printing. But literally, Bitcoin can't survive without its inflation right now. And this problem of the fee market not being enough to sustain without inflation isn't going to be fixed anytime soon. Whereas Ethereum has a thriving fee market, and Ethereum itself is deflationary. There is enough fees burning Ethereum to basically offset all the inflation of new Ethereum, which is insane. So that's not even a bull case for Bitcoin. It's total bullshit. And the next argument I got was Bitcoin is safer from a regulatory perspective. This one, it's another dumb argument, because if regulation cracks down on crypto, that is not a positive for Bitcoin, because it's going to destroy half of the entire crypto ecosystem from existing. Lending, borrowing, gambling, NFTs, all these sectors which would have been thriving and helping Bitcoin in its growth by having more people come into the entire ecosystem are now dying off, and that's going to take away capital that could have got into Bitcoin. So I don't see regulatory advantage as a bull case. And so those are three of the main reasons that I got told to buy Bitcoin. The main issue with all these reasons is basically it's not a positive for Bitcoin. It's just a reason not to own something else. They're not saying Bitcoin's good. They're saying Ethereum is bad. Altcoins are bad. That's why I'm not convinced with any Bitcoin thesis. So I've sold all my Bitcoin for Ethereum. And I believe that Ethereum offers better risk-adjusted returns than Bitcoin. I think that Ethereum has less downside and more upside, and thus it's a better investment of my money. Now, at current levels, Bitcoin is down 75% and Ethereum is down 74%. So Bitcoin, even though people say it's this safer store of value, it's actually gone down more in price right now than Ethereum. Because I've said this, someone's going to make the argument, yeah, but from the exact top to the exact bottom, Bitcoin went down 77% and Ethereum went down 81%. Okay, sure, you can make that argument, but Ethereum is a higher beta asset, meaning that you take on additional risk for additional return. Ethereum only had an extra 3% risk because it went down 3% more, but in return, how much more upside is Ethereum going to have by being a higher beta asset? I would argue that Ethereum technically went down more, but on a beta adjusted view, it outperformed Bitcoin, especially considering if you compare the bear market performance of Bitcoin and Ethereum in this market versus in the last bear market where Ethereum crashed like 90+%. And so I'm not bullish Bitcoin because I don't see a promising future, but for Ethereum, I'm very bullish and I see a very promising future. And these are the three reasons why I'm very bullish on Ethereum. Number one is the Shanghai update. So we have this update coming out for Ethereum, which is going to allow anyone to stake their Ethereum and be able to unlock it as well. So right now you can stake Ethereum, but you can't unlock it. When you lock your Ethereum up, potentially it's locked forever. You can't decide to unlock and get access to your money. But the Shanghai update, which is coming around end of March, is going to allow anyone to stake or unstake their Ethereum. And in my opinion, this is going to lead a new narrative for Ethereum where a lot of people are going to be staking their Ethereum. And this is going to increase the amount of locked up Ethereum on the network. Now, right now, 13% is staked. On other networks like Cardano, they have about a 70% staking rate. So you can see that the difference is about 57% between Ethereum and ADA. So with the Shanghai update, I expect a significant amount of Ethereum to be locked up. That's bullish for price because there's less money that can be sold. Less supply means you need less demand for price to rise. This is the second reason. Deflationary. Ethereum with the merge is now a deflationary asset when you have a very small amount of fees from people using the network. So you have a very small amount of fees. This is used to burn Ethereum. When you burn more Ethereum than is added from inflation, the asset becomes deflationary. This is good because this means that there's no passive sellers of Ethereum. When price goes down, you have constant new sellers in Bitcoin. You have people constantly selling the Bitcoin they mine. In Ethereum, you don't because there's more people buying from fees burning Ethereum than there is from new inflation. So it's deflationary. The third reason is basically the largest NFT and DeFi adoption. So NFT and DeFi is the use case I see growing crypto the most. And because Ethereum is the number one place for these two industries, I expect Ethereum to be used significantly, the token. Because of all the users and the volume of people on Ethereum, it's going to cause a lot of fees, which is going to mean a lot of Ethereum is burnt from these fees. And that's really positive for price. And so there's actually one more reason that I like Ethereum over Bitcoin. It's a bit of a complex idea, I'll be honest. And it's the idea of Ethereum is a net income positive asset. So both Ethereum and Bitcoin have two things. They have fees from people using the network and they have inflation of new tokens. On Ethereum, fees and inflation goes to holders, which means it's a net income positive asset. It encourages people to hold the asset. When on Bitcoin, the fees and the inflation go to miners. Now, the miners don't have to hold a single Bitcoin. In fact, miners sell 100% of the Bitcoin that they get from mining. And you can see that in this photo here. 100% of Bitcoin mined is sold. So there's no incentive for a miner to hold a Bitcoin versus on Ethereum, you have to hold Ethereum to basically mine and provide security. So when there's an estimated 1 million miners on Bitcoin, and let's assume a cost of $400 per miner, that's $400 million of mining equipment that could have been used to buy Bitcoin like in Ethereum, but instead it was used to buy mining equipment, plus billions of dollars in operating expenses from a 19K mining price per Bitcoin. So not only is there $400 million not in Bitcoin that's in miners, there's billions of dollars being spent on electricity, warehousing, running costs to justify spending 19K per Bitcoin. And so basically the cost to mine Ethereum is basically solely owning Ethereum, right? You don't have to buy any mining equipment. You don't have to spend all this money on electricity. It's mostly just holding Ethereum. And so security expenditure is kept in the ecosystem, not out. All that hundreds of millions of dollars on Bitcoin mining equipment, electricity, warehousing, etc., is money that could have been in the actual ecosystem, but instead it's out. And so the really smart people watching this would then say to me, yeah, but you're literally describing the difference between a commodity and a security. If you don't think that the value can accrue to commodities because they aren't securities, then you need to hit up Finance 101. I saw this on Twitter under a post on a guy explaining this concept. And it's an interesting idea, but there is an interesting response to this, which was basically, in some ways this is correct. The issue is that for commodities, their security does not depend on price, and therefore they are not prone to the negative feedback loop that Bitcoin is. They are similar in some ways, but different in some other very important ways. And so the basic concept here is that the security of gold is not dependent upon its price. Gold is just as secure at various different price points. For Bitcoin, the network loses security when price is lower, because when price is lower, the amount of money that a miner is willing to spend to mine a Bitcoin is less. And when a miner spends less to mine, it means that the difficulty of the network will decrease. When the difficulty decreases, it means that the network is less secure because you need less hashing power in order to get 51% of the network. This dynamic does not occur in commodities. So Bitcoin is a different asset. Its security is tied to its price. And so this is why you can't make this comparison here. And this is again why my bullish thesis for Ethereum is all of the factors I've listed before. And so for context, I am an investor looking to make the highest risk-adjusted returns on my portfolio in the crypto ecosystem as I can. I'm young, looking to take risk, and I'm not looking for safe, low-risk investments. If I was, I'd be buying things like gold, real estate, etc. Sure, there might be a certain type of person that buying Bitcoin makes sense for, but for me, this thesis with Ethereum makes a lot more sense for my situation, and you should really consider everything that I've said if it's worth you updating your portfolio based on the information. If you like this video, you're going to love the free guide that I have below, the top investments that I think are going to perform well in the next bull run. It's 100% for free, and I recommend you grab a copy below. Thanks for watching. I'll see you in the next video.